Are you spending 10 to 15 hours every month closing your books, chasing numbers in spreadsheets, and pulling together reports that nobody reads on time? There's a better way, and it doesn't require hiring an accountant or learning complicated software. Small business owners tell me the same story every week. Month end comes around and everything stops. You're stuck reconciling transactions, categorizing expenses, comparing actual spending to budget, and trying to explain why the numbers look the way they do. By the time you finish, the information is already outdated, and you're too exhausted to actually use it for decisions. This isn't just frustrating, it's expensive. Those 15 hours cost you real money, either in your own time or in paying someone else. Worse, when your financial reporting is slow and manual, you're making decisions based on old information. You might miss cash flow problems until they become emergencies. You might keep spending on things that aren't working because you don't see the pattern until weeks later. Here's what most small business owners don't realize. The actual accounting work, the debits and credits, that's not the problem anymore. Most businesses already use decent accounting software. The problem is everything around it. Gathering the data, checking if transactions were categorized correctly, comparing this month to last month, writing the explanations, sending reports to partners or investors. That's where your time disappears. AI automation changes this by handling the repetitive decision-making that you do every single month. Not the judgment calls, not the strategy, but the predictable steps that follow the same logic every time. Let me show you what this looks like in practice. Start with transaction categorization. Your accounting software imports transactions from your bank, but someone still needs to review them and fix the ones that got categorized wrong. Maybe the software puts your Google Workspace subscription under software, but you want it under marketing tools. Maybe it can't tell the difference between different suppliers. An AI system can learn your categorization rules by looking at your past decisions. After you correct a transaction once, it remembers. The next time a similar transaction comes in, it categorizes it correctly automatically. It can handle patterns like any charge from this supplier goes to office supplies, or transactions on Fridays from this restaurant chain are team lunches, not client meals. Instead of reviewing 200 transactions manually, you review maybe 20 exceptions. The system flags anything it's uncertain about. Your 3-hour categorization task becomes 20 minutes. That's real time back in your week. Now let's talk about the actual reports. Every month you probably create some version of the same financial summary. Revenue compared to last month and last year. Expenses broken down by category. Gross margin, cash position, maybe a few notes explaining unusual items. AI automation can generate these reports automatically. The system pulls data from your accounting software, performs the calculations, identifies significant changes, and creates a formatted report. But here's the part that saves the most time. It can draft the explanatory notes. The system notices that office supplies increased 40% compared to last month. It checks the transactions and sees you bought a new printer, an extra inventory of paper and supplies. It drafts a note. Office supplies increased $1,200 due to printer purchase and quarterly supply stock up. You review it, maybe adjust the wording, and you're done. It sees that revenue dropped 15%, but notices this happens every August in your business. It drafts. Revenue decreased in line with typical summer seasonality, consistent with August results from prior years. 1 minute of review instead of 15 minutes of writing. The system can create different versions of the same report for different audiences. A detailed version for you with all the categories and notes. A summary version for your business partner with just the highlights. A formatted version for your investor with comparison charts. All generated from the same data automatically in the format each person expects. Let's look at what this means in practical terms. A small professional services firm I worked with was spending about 12 hours per month on financial close and reporting. The owner and the part-time bookkeeper would spend a full day on transaction review, another few hours on reconciliation, and several more hours creating reports and explanations. After implementing AI automation for categorization and report generation, that dropped to about 4 hours total. The system handled routine categorization, flagged exceptions, and generated draft reports with explanatory notes. The owner spent 30 minutes reviewing categorizations, an hour on reconciliation checks, and maybe 90 minutes reviewing and refining the automated reports. That's 8 hours saved every single month. At a billing rate of $150 per hour for the owner's time, that's $200 in capacity returned every month. Over a year, that's $14. $400 in time that can go to client work instead of administrative tasks. The automation system cost less than $2,000 to set up and about $100 monthly to run. But the time savings isn't even the biggest benefit. The real value is speed and consistency. Reports that used to arrive on the 15th of the following month now arrive on the 3rd. Management decisions that used to wait for month-end numbers can happen in the first week. Cash flow problems that might have gone unnoticed for weeks get flagged immediately. The business owner told me the faster reporting changed how she manages the company. She can see immediately if a new marketing campaign is generating positive return. She can spot expense creep before it becomes a problem. She can have informed conversations with her bank about financing because she has current numbers, not numbers from 6 weeks ago. Error rates drop too. When you're manually copying numbers between systems and typing up notes, mistakes happen. A transposed digit here, a wrong category there. The automated system makes the same logical decisions every time. If a transaction matches a rule, it gets categorized correctly. If the system generates a calculation, the math is right. You still review everything, but you're catching actual exceptions, not random typos. Here's what I want you to understand. Financial reporting automation isn't about replacing your judgment or your accountant. It's about eliminating the repetitive steps that consume your time without adding value. You still make the decisions about what matters and what doesn't. You still review the numbers and decide what they mean for your business. You just don't spend hours each month doing work that follows the same pattern every single time. This is accessible right now. You don't need a programming team or $1 million software budget. Many businesses set this up using tools that connect to their existing accounting software and cost less per month than taking your team to lunch. The question isn't whether this technology works. It does, and thousands of small businesses are already using it. The question is whether you want to keep spending your time on manual financial processes or whether you want those hours back to focus on growing your business. If you found this helpful and want to learn more about AI automation for small businesses, subscribe to this channel. I share practical examples every week. No hype, no complicated theory, just real automation that saves time and cuts costs. Thanks for watching.